Hello, this is Joseph Gillette with Venture Capital Cross, and today's talk is about why investing in venture capital is going to be the best way to capture certain opportunities in a high growth expansion, what some are calling a new golden age economy. And some have called things like this a paradigm shift, and that's kind of like the transition between before and after electricity or the internet. Like the world in the 1980s versus the 2000s was materially different because of the internet. Just like the world in the 1890s was different than the 1920s, however long it took to install those electricity lines because of electricity, and then we had indoor plumbing and other things. In today's world, it's more of an advanced tech transition. We already have computers, we have smartphones, we have AI, we have a lot of things, but the new technology, which sounds like science fiction, a lot of it, is really transforming the day-to-day lives of people. It's changing markets, it's changing businesses, and it's happening rapidly. Maybe it doesn't seem that it's happening so rapidly because it's like the frog in the pot. For those of you who don't know, I'll say it's a favorite experiment, but if you place a frog in a pot and you slowly turn up the heat, the frog will die from the water. But if you put a frog in a boiling pot of water, it will jump out. So when change happens abruptly, in like an hour, if there's a thunderstorm rolling in, you're going to notice it. But if it happened over a period of years, the same thing, if you condensed it into an hour, it wouldn't be so obvious. So paradigm shift and change is happening rapidly to the economy. We have a very disruptive government, and whatever you think that it's good or bad, you have to agree that it is changing things. It's disrupting the markets. It's disrupting not only politics, but regulations. And for example, recently we have news of a boost for the nuclear sector. We're going to deregulate, and that's going to be bullish for the nuclear and related stocks. And so there's a lot going on in markets. There's a lot of positives, there's a lot of negatives, there's a lot of friction, there's volatility. And our argument is, and we're biased, of course, we're in the venture capital sector, but we also do public stocks and things that are connected to public markets. And I just, in all the experience, and before I say anything, of course, this is not investment advice. Anybody who tells you that they know what's going to happen in the future is lying, because no one knows what will happen in the future. Generally, stocks do well over time. And the best way to buy this, invest in the stock market, many people say, is just buy the index, and then you can't lose. Of course, you're not going to get. You can't lose. Of course, you can lose, but you can't go wrong. Is a better wording. And the reason is because individual stock picking is tough. Individual companies can do well or poorly, but in our experience, big companies, and we don't want to name any names, but the mega caps are not in such a good position to seize on innovation and change as the VC firms are. The venture capital industry has grown so much, and I'm not talking in terms of capital. They've grown in that term as well, but they've become a lot more nimble and a lot more flexible, and they listen to the market. So like Sequoia and a lot of VC firms are now getting becoming registered investment advisors. And this is a shift towards the hybrid model. And that's what we're doing with Venture Capital Cross. We're a DBA of a broker-dealer, RF Lafferty. And we're also building out the primary investment business. So our fund is going to do primary investing and co-investing. And that's a hybrid model. So we're both an intermediary and a principal. That can be toxic depending on how you manage it. Obviously, we're going to do it in the right kind of way. As an investor, we're going to bring value, we're bringing talent, and we're doing recruiting, and we're providing tech support, development, and a lot of things to the companies we're investing in, much like a VC accelerator. So we're doing it in the right way, and we're providing value. And as an intermediary as well, a lot of these transactions simply couldn't happen without the intermediary. So we're trying to create value no matter what it is that we're doing as an investor or as a deal maker. So we are biased a little bit because we're deep into this, but what I've seen and what we've seen in markets and with companies is that the not only the startups, meaning not only the AI private companies, are able to move fast and just pivot into new businesses very quickly as things change, they're able to do things like adopt AI into their business. So AI is not about replacing humans like workers, not at all. It's about augmenting current humans and current technology to make it even better. Whether that's research or robotics, that's obviously a hardware issue, not a software issue. But software AI has a lot to do too, but there's a lot of different components to it that are far beyond what people see, which is mostly just making cool images and writing blog posts and things like that. AI is changing business a lot, and a lot of that's happening behind the scenes, but it's creating efficiencies. And not all, I'm not saying that, I mean, this is a generalization. So generally speaking, the VCs, and that's both the VC investors, so the firms who are investing, and the companies they are investing in, the startups, the private companies. It's just a more vibrant and innovative market by default, because those inventors and founders are the innovators who are creating new types of products and services based on this influx of technology. So it's not only that they are the creators, we're investing in creators, it's that they are able to understand creation in a high-tech and advanced way. So in other words, if we want to talk about real AI innovation, or let's just say how to really, like growth hacking is a popular thing now, how to really do that based on a science, you're going to be able to talk to an early stage founder or an early stage investor about things like that a lot easier than someone who's part of the old guard, the more well-established businesses. Because the more well-established businesses, there's nothing wrong with them, but they just basically want to maintain the status quo. That's just the nature of it. Like, let's say you own a bunch of oil rigs and you're getting checks for millions of dollars a month. Why do you want to look at alternative energy? Why do you want to look at anything that would disrupt your payment flow? You just don't want to rock the boat. And a lot of investors that are in that state, and there's a lot of them. In fact, I think the majority of the market is in that state, whether it's real estate or just private equity as sort of a generational legacy asset class, like the big assets, whatever they may be. They don't want to change anything, even if that they could make more money. So they're not willing to risk losing what they have as a good thing, which is sort of guaranteed and it's flowing, for something which is maybe a little bit or maybe even a lot greater. They just don't want to change anything. So they're almost like adverse to change. They don't want to change because they don't want to risk the good thing that they have going. So I don't think this is a class thing so much as a mentality as far as markets are concerned. Like when we look at sociology or politics, it's always a case of the haves versus the have-nots. This is not that at all, because it's always the haves that are kind of important in markets because they have the money to make change. But you've got haves, or the elites, who are into venture capital, and then you've got the elites who are kind of in the establishment, who are in the camp that wants to maintain the status quo. So I think this is more of an intellectual distinction than it is a class or demographic. It's not about like the United States versus Europe, although I would say that generally the US is a leader in innovation, and you're going to see at least twice as many or 5 times more interesting early stage, disruptive, high-tech paradigm shift type of VC deals that are really going to explode happening in the US compared to other markets. But there's lots of innovation all over the world. There's lots of innovation in Europe and in Asia, and it's global. It doesn't matter where you live and work today. And that's the beautiful thing about how the internet has transformed our society. And just like the internet and electricity transformed the world, now we're looking at technologies that we don't even really understand how deeply these technologies are going to impact the future and the near future. So like, look at AI as a research tool. Like, scientists spend, on behalf of big companies, billions of dollars trying to find a cure for cancer or a medicine for a rare disease or something like that. We can simulate a lot of things now with AI and supercomputing, things that couldn't have been simulated before. with quantum physics, we can simulate things and we can create hypothetical scenarios. We can almost do science. Not completely, but we're getting close to be able to actually do science virtually rather than physically, which would open up just massive possibilities. I don't even want to say what it could be, but because it's basically like fantasies. Basically, in the future, in our lifetime, we are going to live in a world of sci-fi fantasy. Things that, like life extension, space travel, deep space travel, space tourism, fast travel. It means traveling from New York to Los Angeles in a very short timeline on tunnels or by some other means. So all of that science fiction is starting to become a reality. And a lot of it has been a reality. It's just been kept secret by some elites and by some in the military and by some organizations that didn't really think society was ready for it, and maybe we weren't. But we're talking about investing. So how do you invest in that and capture that alpha and manage the risk? Because investing is always risk reward. And there's a chart, I can even draw it on a piece of paper. It's my favorite chart because it's like this. It's from Series A to IPO. So you look at this chart is how simple it is. From A to IPO. So A is see in point A is the early stage investing. There's the most risk and the most reward. So you can lose 100% or make 100%. And then over time, as it goes closer to the IPO, you're going to have less risk and less reward. So take a look at any unicorn, SpaceX or any big company. There's less risk because they're well established, but there's less reward because they're already so big. So how much higher can they go? They can go up higher. It's not the limit. There's no limit, but there's a declining risk and reward that's correlated, and you can crunch the numbers and figure out what that chart looks like, but I don't think analysis because there's a randomized factor, or if you want to say from a trader's perspective, there's a gut instinct. These VCs have a very good gut instinct about founders. They know what to look for, and they make videos about it. Kevin from Shark Tank is great about making these videos where he'll say what I look for in a founder, and a couple things that nuggets of wisdom I remember. He said, like, if you can't explain your pitch, your value that you're creating in 30 seconds or a minute, like 3 sentences, like my partner used to say, everything is in 3 sentences. And that's the military grade, military intelligence, like CIA level. Give me 3 sentences. There's a guy who has a history. He has a bomb near the World Trade Center. He was spotted last night with a couple friends. They were speaking Arabic. These are the 3 things you need to know about whatever it is. And in the case of these venture capital guys, they have that killer instinct. And that's why a lot of them will invest only based on other people investing. Like, I'm only going to invest in companies that Sequoia or Lightspeed invests in because they have a system and they're doing all the homework and everything. And that's not, you shouldn't blindly follow anyone. I'm just saying that is the idea. That's the idea behind that investing. Like, I'm going to just piggyback on Warren Buffett or whoever it may be. And people do that with Berkshire Hathaway because their investments are public. So, like, you don't need to invest in Berkha to know what they're doing and to replicate their portfolio, because most of it, well, some of it's private, but most of it is public, and they report those because they're so big. So that's kind of the same thinking in the venture capital world. But those VCs that have the killer instinct, either they are founders themselves, or they are able to sort of be on the same frequency as the founders and understand, why is this guy an innovator and this guy is not? Like, in my case, my job is to size up people for being time wasters or scammers, and they're equally toxic in my opinion, because some people will waste your time. They're not serious. request meetings and fill out paperwork and have lawyers draw up documents, and they're never really going to do anything. And I'm sure that a lot of people have this ability to detect if someone is just kind of pulling your chain. And the VCs are real good at this. So my point is that the venture capital industry, like a group, like all of these smart guys as a group, are able to identify what's real versus what's not. Because here's the problem. There's going to be a lot of exciting things going on. But there's also going to be a lot of scammers who are taking advantage of that. So I've always been on the cutting edge of markets and what's interesting. So I was like a currency trader for 20 years. But I started in the year 2000 or so, 2001, when it wasn't very popular. And what happened, it was in that time they called it Forex, which I never really liked that word, but all the scammers go to what's popular in the time, like what's in vogue. Like now, it's private markets. Recently, a few years ago, it was crypto, it was Bitcoin. All the scammers went to the Bitcoin. But when I was doing currency trading, it was the Forex. And they were very sophisticated scams. So the problem with new technology is that people don't understand it. So here's where scammers can inject their story, and people can't figure out if this is real or not. And so there's going to be a lot of risks with this new market because it's new stuff. So I'm not saying that by any means that this is going to be just like, I mean, it's going to be a bonanza, but it's not going to come without risk and without problems. You're going to see a lot of people kind of piggybacking on the stories. Like with the med beds. Med beds are a real thing. Military has it. And I know people who have physically seen them and experienced them. But that doesn't mean that every person claiming to have med beds is real. And in fact, I've seen some things which I'm sure were scams. People selling access to med beds, which is it's not the real thing. So in other words, whether it's Forex or Bitcoin or SpaceX or Rolex watches, you're always going to have this part of society that's going to try to sell something that isn't the real thing in order for personal profit. And now, let me be clear. Not all the scammers are aware that they're scammers. In other words, you've got people who really believe, I mean, they're not like outright stealing. But what they're doing is they're kind of creating their own thing, which looks like this big thing, but it's really not so valuable or functional like the big thing. And they're just kind of riding on the coattails. So I'm not saying that these scammers are, I use that word because they're so annoying and toxic. But not all of them are bad. Not all of them are like, they're not like Bernie Madoff type of scammers where they're knowingly robbing people. They may be just bad developers. They may think that what they have is really great technology and it's really not. I mean, there's been something like 1 million, or I don't even know the number, so I'm afraid to quote it, but something like 500,000 or 1 million or even more AI companies that were founded in the last year in Delaware, like LLCs with the purpose of doing AI. So obviously, I mean, some of them are going to be just like for corporate purposes, like OpenAI has like 1,000 entities for doing different things. But a lot of them are startups by legitimate people that really want to do something, and they're never going to go anywhere. So I'm not at all saying that like all the scammers are necessarily have ill intentions. But for an investor, we have to be very cautious and careful, because anything which is new, which is not proven, unless you have a really robust track record and some like verifiable evidence, like you can use the product and it works and you know this is going to work, I would be very cautious, and I'm very skeptical about everything and anything, even from big companies. And the VCs are very good at this. So they're very good at like looking at someone's track record and where were they before? Okay, he worked at Apple. What did he do at Apple? Does he, what kind of value did he create in his previous role? Or if he's already founded a company, what was his exit, or why didn't it work, or things like that. So that's why I believe, in conclusion, that the best place to capture this is in the venture capital world, because especially with the support of the larger community. So having a certain VC on a cap table is not an investment signal by itself, because these guys invest in thousands of companies. But it's certainly positive, and it's certainly a positive data point for the issuer if you get a tier 1 VC or even a tier 2 VC, or really even any VC, because VCs manage institutional capital for other people. So it's their job to invest in companies. So that's a positive sign. And there's other positive signs we can look at in other videos. But the point here is that I think compared to other markets, I think the most growth in this new paradigm of a new golden age as things are happening, whether it be in nuclear energy or in traditional energy. I'm not saying that it's all going to, AI is unique because it's new, but I think traditional industries are also going to be disrupted, whether it's transportation or aviation or logistics. I see a lot of things interesting happening in the supply chain and logistics that are probably going to take time to implement, because it's kind of a hardware intensive industry, but also in things that you might not expect. Life sciences, construction, things like real estate, like markets, all kinds of things. There's going to be a lot of disruption in science, in medicine, in just across the board. And they're going to affect each other. So someone's going to make an AI model that works, and they're going to be able to use that in construction and in medicine. And then someone's going to create something in construction, and then hospitals are going to be built differently based on this new construction technology, and so on and so forth. So I think what we're going to see is a positive feedback situation that's going to be across all sectors, and it's not going to be competitive as like what we've seen during the post-World War II boom, which was largely kind of a, I don't know how to say this right, like it was like a monopolistic controlled growth. Like we knew that there were things like plastics, like he said in The Graduate, and computers, that was technology that we knew we had, and we're going to kind of drip feed it out, and that was going to be good for 20, 30 years of growth. And then it's sort of a controlled release where you've got 3 or 4 monopolies, oligopolies that are allowed to compete with each other. But it's a little bit contrived, and it's a little bit dog eat dog in a feudal. It's almost like a feudalistic model where you've got like the faction A versus faction B, like Coke versus Pepsi. I think we're going to break out of that. So I think what's really exciting about that, what's going to happen, is we're going to break out of this Hegelian dialectic of red versus blue, Coke versus Pepsi, because that in itself, that paradigm of dualism is itself limiting, because you've got, I mean, I don't want to use the soda analogy, but thousands of different sodas. So the idea of Coke and Pepsi probably have like 90 or 99% of the market, whatever it is. And I think we've seen that in the craft beer space has been really interesting. I read like 10 years ago about how like 20 years ago there were like 100 craft breweries, and now there's tens of thousands, and they've taken tens of percent in market share away from the Budweisers and the big companies. And I think that's what we're going to see happening at scale. But here's the catch. In many ways, the venture capital companies are similar like the mega caps in terms of their size. I mean, they're billions and billions in size. But I think they're going to be able to capture that better than your traditional well-established firms, whether they're software companies or like the medical insurance companies. I was at a hardware store the other day. I'm afraid to say Lowe's and Home Depot, like places like that. I don't know that they can jump to the next level because they have these legacy systems. And this is the case with like the airport transportation system is a great example. Could we let's say we had a new transportation method that was better than planes. Could the airports and the whole airline industry quickly pivot to that? Or would it be seized up by all these kind of startups and the VC crowd? And some companies, and I'm not naming names, but some companies are so big, they just can't change. And I think the government is a great example of that. Elon went into this role and he found all this fraud and waste, and then they did nothing to codify it. So it was like 1 month's worth of waste. This is mandatory spending. And then all the government people came and said, well, what Elon did was nice, but actually government doesn't work like that. It's basically a blob or a scam, if you want, that can't change. I've realized this now. We don't have a government. We have a scam. And it's such a complicated scam. There's layers and layers to this thing. And there's ways that it actually advertises itself to be a bigger scam. It's crazy. And I think that's the same case with big industry, because it's so deeply entrenched. It's in our minds. It's like people are programmed. Like if you get shrimp, raw shrimp, you have to eat it with cocktail sauce. I mean, how can you eat shrimp without cocktail sauce? In the United States, people are so programmed, and I'm guilty of this too. So I'm not casting stones in the glass house. I cannot eat cocktail shrimp without cocktail sauce. And in the times when I couldn't find cocktail sauce, I made it, and I figured out how to make it. All it is ketchup and horseradish. And you can even make it better yourself. But the point is, our economy has learned, partially from Edward Bernays, but also just through experience, that people can be programmed conditionally to engage in certain repetitive behaviors, which then reinforce themselves and spread like a virus. Actually, the word meme, it's a very interesting word. If you look up the definition and the etymology, a meme is a virus of the mind. And we are controlled by memes. And I'm talking actual mind viruses, not like a meme of a cat on the internet. Viruses of the mind. And that can be a good thing. Like a virus could tell you, well, you should wash your hands before you eat. That's a positive meme. I'm not saying that it's all bad. But what I'm saying is the well-established companies have captured the collective subconscious of society, and those reinforcing memes have hardwired into the brains of 99% of the population. And it's not easy, it's not impossible, but it's not easy for people to break out in that. You can't break out of this well-established regime of you're just going to have your coffee in the morning. You're going to have your drink at 5 o'clock. At this time, it's time to go to bed. You sleep 8 hours a night. You eat 2,000 calories a day. That's what the doctor recommends. You're going to go to school at this time. You're going to learn this at school. Why do schools even teach what they teach? Our society is going to be transformed so quickly, so fast. I mean, even in my time, I took banking and finance in college. I actually went to college for 7.5, almost 8 years, and didn't get a degree because of some idiotic political thing where I was taking classes more advanced than I should have been. And even though it was so many years, it didn't add up because it was not part of it. Was graduate level classes. It doesn't, it's just absurd nonsense like this. And all of the things I learned had nothing to do with what I did in my job as a currency trader. In fact, there isn't any place you can really learn how to be a currency trader or manage currency risk. And I know lots of guys in the field that manage huge currency books for massive corporations and banks and central banks and things like that. And they might have went to finance school, but finance school will tell you, just as one example of how absurd the educational system is, you can predict a currency 6 months in the future, which is basically the interest rates divided by, with some formula, what the forwards are trading at. So forwards are like currency futures. And then you can say, well, based on the interest rate and what the rates are now and the forwards, and then you can calculate what the British pound is going to be against the US dollar 6 months from now. Obviously, that doesn't work. And I don't even know why they publish it in a book. It's like you learn things that are totally useless. And I'm thinking that with my kid and with any generation of kids who want to learn to finance, I think the best advice I can give them is get licenses and go to work. And I think Kevin O'Leary said the same thing about apprenticeships and internships. You turn 18, you want to get into finance, get your Series 7 license. Become a real estate agent. Get any kind of license. Series 7 is good because it's pretty hardcore. Even if you don't want to do securities, it's pretty difficult, and you're definitely going to learn and understand. Passing the test is hard enough. Then when you get hired, and if you have a Series 7 license, you can pretty much get a job. It might be entry level, but that's where the real learning occurs in finance. I can attest. And I'm sure in other cases. Now, of course, if you're going to be a doctor or a certain technical engineering, for example, there's a lot of technical stuff you need to memorize and know. And if you're a doctor, a surgeon, something like that, you have to go to specialized school. I'm not against the educational system in general. What I'm saying is that things are going to be changing so rapidly across the board. We're talking about investing and where to put your time. I would suggest people focus on the innovators and venture capital. And if you're not an investor, the best place to look for jobs and the best place to look for work is in the same sector. So if you have an idea and it's in your blood, be a founder. You have an idea, take it to an investor. Start working on it. Start building it. If you don't think that that's for you and you just want to bring value to a company and get a paycheck, and the pay is pretty good in startups typically and in the VC firms, get a job. So what I'm promoting is not only for people who have money to invest. It's really, what I'm saying is that the best way to capture growth is to be in the growth-focused sector, which is venture capital and the ancillary services. That means if you want to be in finance and you work for like a broker-dealer or an investment bank, there's a whole series of vendors that work with the VC firms. So we're talking jobs, the whole thing. And it's global now. So there are, no doubt, a lot of headquarters in Silicon Valley in certain places. Atlanta is kind of an up-and-coming startup hub, and there's different hubs. But practically, as long as you can travel around, it doesn't matter where you are anymore. As long as you can go to the capitals once in a while for some meetings and press the flesh. Not regularly like it used to be since COVID. You can pretty much just meet occasionally and just work hard. You can work hard from anywhere. So that's the message. That's the point. This is going to be a really exciting ride, and I think the next 10 years are going to be like better than, it's just going to be so crazy what some of these companies are churning out. And I've seen a little bit of a sneak peek, and I've talked about some of what that is, and people just think I'm nuts. And I like that, because now it's like the quiet before the storm. It's like the calm before everything changes. So we're going to remember this time now as just the sweet kind of sentimental time where everything was just calm and we were a little bit happy and naive and just living our lives, and then something will just materially shift the whole world at once, like a wave of information just transforming everything. So that's the conclusion. And we have a book, Investor's Guide to Legal Insider Trading, and an Udemy course on venture capital. This talk is going to go in there, as well as other talks we've done on AI and other things. Our website is soon to be launched. We're making a portal for private markets. The name of the company is Venture Capital Cross. It's backed by RF Lafferty & Co. Inc., which is a broker-dealer well known on Wall Street. And we look forward to seeing you in other videos. Have a great day and good luck. May markets bring you good karma, and may your investments grow to their maximum potential. Thank you.